All right, so we're diving deep today into some market indicators, from volatility coaches to help us all figure out, is this the time to jump into the Indian market?
You know, it's really interesting. This material, it's like a time capsule. From December 8th, 2024, what were investors seeing? What were the signs?
Right, like a snapshot. Okay, so one big one they talk about, the Nifty 50 PE ratio, 22.72. What's that telling us, really?
PE ratio, it's like, how excited are investors? 22.72, that's pretty high. Higher than a lot of global markets even.
Okay, so they're feeling good about India.
Seems like it. And, they mentioned a projected return like 5.5% annually.
5.5%. Not huge, is it?
Might not seem like it, but India's market, it's known for stability, lower risk, Compared to some emerging markets, that's pretty solid.
So PE high, but maybe that's okay because things are stable.
Could be. But always got to look at the history, too. Like, how does this PE compare to the average, say, over 5 years?
Yeah.
If it's way lower now, could be a buying opportunity.
Context. Got it. Now, they also keep talking about flexi-cap funds, like long-term strategy. What are those all about?
Flexi-cap funds, think of them like all-terrain vehicles for investments. They can move between different types of companies, big, small, in between, depending on how the market's doing.
So they adjust kind of automatically.
Yeah, exactly. Good for long-term because you don't have to constantly be fiddling with your portfolio.
Set it and forget it, sort of.
Pretty much. And it fits with their whole focus on large-cap funds, too, right? Flexi-cap can do that, but also explore other areas.
Balance, huh? Growth, but with some safety nets. Okay, then there's the sectors they highlight. Banking, finance, IT, consumer goods. Why those?
Those are the biggies in India, driving the economy. Banking, finance, well, they do well when the economy is doing well. Loans, interest rates, all that. IT, India's a tech hub that's only growing. And consumer goods, huge middle class there, lots of buying power.
Makes sense. Strong economy, these sectors do well. It's like volatility coaches are betting on India's success story continuing.
Yeah, and they're not just looking at one thing, connecting the dots, between all these indicators to see the big picture.
So speaking of indicators, they've got this whole table, the RVCC parameters, all these acronyms, PE, PB, MG. What's the deal with those?
Think of them like different tools to check the market's health. PE, we talked about that. How pricey are things? PB, price-to-book ratio. That's comparing a company's price to its actual assets. Another way to see if it's a good deal.
So PE is potential. PB is what's already there.
Okay.
MG, what's that one?
MG, that's market cap to GDP. Comparing the whole stock market to the entire economy to see, are things in balance?
Like, is the market getting ahead of reality?
Exactly. Then you've got sentiment indicators, RSI, relative strength index. That's about price momentum. Is it getting overheated?
Okay, got to keep an eye on that.
Then there's FII, net open interest. That's about those big foreign investors, institutions. Are they putting their money in?
So if it's high, that's good.
Usually means they're feeling bullish, yeah. And lastly, VIX. That's the fear index.
Yeah.
How volatile, how shaky does the market feel?
So low VIX, everyone's chill. High VIX, buckle up.
You got it. So yeah, lots of pieces to this puzzle, right? But together, they can help us understand what's going on in India. Okay, let's look at these RVCC parameters. The snapshot, December 8th, like a peek behind the curtain, right? What was going on?
Right, back in time. So the Nifty PE, 22.72. High, we said. But historically, is that crazy high?
That's where we got to compare, right? The 5-year average for the Nifty 50, it's been around 20. So 22.72. Yeah, it's higher, but not by a mile.
So some optimism, but not totally out of control.
Exactly. Not irrational, let's say. What about the PB ratio? For Nifty 50, it's at 4.07.
TD, that's the assets one, right?
Yep, price to book. And historically, the 5-year average for the Nifty 50, it's more like 3.5.
So again, a little higher than usual.
A little, yeah. Means investors are valuing companies a bit higher compared to, their actual stuff.
Interesting. Okay, let's talk vibes. What's the VIX saying? The fear index.
On December 8th, it was 13.5. Pretty low, actually.
Low's good, right? Less fear.
Exactly. Means less expectation of big price swings, volatility.
No roller coaster for now.
Hopefully not. Now, that FII net open interest, what was that looking like?
That one's always a bit confusing.
Right. It's about those big investors, institutions, mostly foreign. Are they buying into the market using futures and options?
So if it's positive, that's a good sign.
Pretty much, yeah. And on December 8th, it was definitely positive. Plus 7.51 lakh.
Wow. Okay, so they were liking India.
Seems so. Confident enough to put their money in.
Okay, so that's what calm market big investors are in. What about that MG ratio? market compared to the whole economy.
Ah, right. That was 108.6 on December 8th.
Over 100%. Didn't you say that could be worrisome?
It can be, yeah. When it's above 100%, sometimes it means the market's getting ahead of itself compared to how the economy is actually doing.
So is that a bad sign then?
It's something to consider, for sure. But India, it's been growing really well for a while, so maybe the market's just reflecting that potential.
So high MG could be good, could be risky.
Yeah, it's all about context, right? You can't just look at one number and freak out. What's the overall picture, the economy, those specific sectors? What are other indicators saying?
Right, the whole puzzle. Okay, and you mentioned EMA too, exponential moving average. How does that fit in?
EMA, it's a way to spot trends. The Volatility Coaches material, they talk about using the Nifty 13 EMA. Like if the Nifty 50 crosses above that line, that's a buy signal maybe. Momentum shifting.
So timing the market kind of.
In a way, yeah. And on December 8th, Nifty 50 was above that 13 EMA line.
More good signs then.
Seems like it. So we've got what? Calm market, VIX is low, big investors are buying in, valuations are a bit high, but maybe that's okay. Even the trend looks good. But got to be realistic, right?
Always. There's got to be some risks, right? Nothing's perfect.
Yeah, exactly. What if interest rates keep going up? That could slow the economy down, hurt those sectors we talked about.
Yeah, good point. And what about the rest of the world? Like global stuff can affect India too, right?
Oh, absolutely. Politics, trade wars, who knows? India's not an island.
So even though things look good now, gotta stay alert.
Always. Investing's not a one-time thing. It's like a constant process, learning, adjusting. So tying it back to volatility coaches, right? They like large cap, flexi cap, those sectors. Does all this data support that?
Yeah, that's the big question. Let's dig into that in the last part, see if it all adds up. All right, so time to put it all together. Indicators, trends, what those big investors are thinking. How do we actually UEC all this to decide, should I invest in India?
It's all about connecting those dots, right? Back to what volatility coaches were saying. Large cap funds, flexi cap, those key sectors. Does it all line up?
Right, like they gave us the pieces, but WE got to build the puzzle. So large cap funds first. With everything we know, does that still seem like a good idea?
Well, think about those economic numbers. GDP is strong. Inflation's under control. Politics are relatively stable, at least. That's all good for big companies, large cap.
Yeah, they're usually the ones that weather storms best, right?
And to be, more established, track record and all that. But those valuations, remember, PE, PB, they were a bit high.
That's true. Makes you wonder, is the price right?
It does, but could also be markets just really confident in India's future. Like they're pricing in that growth.
Tough call. Maybe that's where FlexiCap helps, right?
Could be. Bit more flexibility if things get bumpy. Don't have to only bet on large cap.
Best of both worlds, maybe. Okay, what about those specific sectors? Banking, finance, IT, consumer, all doing well, tied to India's growth, but anything else to consider?
This is where your own research comes in, right? The big picture's good, but gotta zoom in. Like banking, okay? Which banks specifically? Some are going to do better than others, depending on interest rates, lending, all that.
Right. Got to go deeper than just banking's good. What about IT? Global powerhouse, but anything to worry about?
Competition's always a factor. Other countries, even within India itself. Plus, tech changes fast. Got to make sure those Indian companies are keeping up.
Adapting, innovating, all that. And consumer goods, relying on that big middle class. What could mess that up?
Lots of things, potentially. People spending habits changing, inflation going wild. Even government regulations could throw a wrench in things. Got to look at each company, each brand, what's their position, what's their strategy.
So really, we've given folks the tools, but they got to do the building themselves.
That's it. This deep dive, it's like equipping you. But the actual decisions, that's up to the individual investor.
Well, we've covered a lot. From those big economic indicators down to specific sectors, even how the market's feeling, all that. Hope everyone listening feels a bit smarter about India now.
And remember, this is just one point in time. Things change. Got to keep learning, adapting. That's how you win in investing.
Couldn't have said it better myself. So to everyone out there, what's next for you? Going to check out those large cap funds? Dig into those sectors, or maybe you've got your own ideas brewing now.
Whatever it is, enjoy the journey. Investing, it's not just about the destination, it's about the whole process. Learning, making decisions, that's part of the fun.
Well said. Thanks for joining us on this deep dive, everyone. We'll catch you next time for another adventure in knowledge.